Hello, this is Jordan, and this is your precious metals video market update. This video is being recorded on Tuesday, December 7th, 2021. Thank you so much for joining me today. And in this video, I am going to explain what is going on in the big picture for gold. So if you are confused about what's going on, why it's happening, and what could be coming down the line, this is the video for you to tune into. So first off, this is an important big picture chart that I follow, and we have at the top we have gold, we have in the middle gold stocks against the S&P 500, and then at the bottom we have the CAPE ratio, which is a 10-year price earnings ratio for the stock market. And that ratio is a very important valuation indicator. It also can be used to assess potential future market returns. And you can see that when the CAPE is very high, when it reaches a historical extreme, that tends to mark a point when a secular bull market in the stock market, U.S. stocks, can end. And from there, that's when gold and gold stocks really outperform and when they do their best. And so we can see that lows in the CAPE ratio, if you look at the early 1930s, 1942, 1980 or 1982, even 2009, those were all great periods to buy stocks and really major long-term lows in stocks and the stock market. And today we see, there's a lot of similarities between today and the 1960s, and that was because in the early to mid 1960s, gold stocks, they started trending higher, but the bull market in stocks, it kept going, and the Dow peaked in 66, but the S&P, I don't think it peaked until 68, 69 in real terms, and then it made another marginal new high, I think 1970 or so. But so based on that, there's a lot of similarities between then and today, because we see that gold and gold stocks, yes, they've performed, okay or well over the last 5.5 years since that 2015, early 2016 bottom. But the stock market has continued to perform really, really well. It's made higher highs. It's, depending on which dates you pick, the stock market has still outperformed precious metals. And that's why the precious metals have really been unable to get going. Gold's been strong, but the gold stocks and silver on the whole, they haven't really done that much if we're looking at the last, 5-7 years or so. So, but we can see here, if you look at the CAPE ratio, it's close to 40 now. So it's already at a historical extreme. And the gold stocks against the S&P 500. By the way, if you use gold against the S&P 500, it looks very similar. But the gold price was fixed until 1971, so it makes more sense to use the gold stocks in that ratio. But the good news for us in precious metals is that at some point, maybe it's this year, maybe it's going to be in the next year or two, the CAPE ratio is going to roll over. Stocks are going to go into a bear market. That's going to start a new secular bear market in the stock market. And that's the point when, if you look at the top there, gold is in a very bullish cup and handle formation. That's the point when gold is going to explode out of the cup and handle formation and have a new bull market, a real bull market where it's outperforming the stock market and it trades $3,000, $4,000, $5,000 an ounce. So that's what needs to happen. The stock market and the secular bull market has to end. And here, this is gold at the top, gold against the S&P at the bottom. And you can see the major bull markets in gold is outperforming the stock market. Now, that hasn't been the case in recent years. So even though gold has been able to rally, back up, briefly it was above the 2011 peak. But for the most part, it's in a very bullish 10-year base at this point. So going into next year, you could call it an 11-year base. And so that base is going to serve as a launching point when gold, as you can see at the bottom right there, when gold is able to outperform the stock market. When it breaks above that blue line resistance at about 0.7, that's when gold is going to be exploding, like I said, going to 3,000, 4,000, etc. that's when gold is really going to be outperforming, and you have a real bull market. And at the same time, that's, as I said, that'll coincide with the explosion out of the very bullish cup and handle pattern, which we're still building the handle now. And I've written and done videos about that. That is a super bullish pattern, and gold can correct to the 50% retracement down to 1560 or wherever it is. That is still still a very bullish cup and handle formation, even if that happens. Now, in the chart above, I have the equivalent of the 40-month moving average. Look at the blue arrows. You can see how meaningful that line is. So I think it's around 1620 right now. And, I'll do some videos in the coming weeks about, where gold could potentially bottom, where this correction might end. But, it could come towards that 40-month moving average, which is in the low 1600s, but give it 2, 3, 4 months, it's probably going to be pretty close to that 1670 low potentially. So that's something to keep in mind. Now, before you click away from this video, I still have some slides in this video, but for those of you who have not, click the link in the description. You can get a free report. This is my top stock pick for the next 2 or 3 years. In the most recent premium update, I've noted some buy targets for the stock because obviously gold stocks and juniors, they're getting hit. So with this company, I'm super bullish on it for the next 2 or 3 years. I believe it has 10-bagger potential. If you're able to buy this 10 or 15% lower than where it is, I mean, it has 15x potential if the company executes, if gold can reach 3,000 in the next 3 years. So if you haven't seen this, you don't want to miss this, guys. Click the link in the description. Now, back to our regularly scheduled programming and analysis in this video. And there's a lot going on in this chart, but just look at the top and you can see that the 3 biggest corrections for the S&P in the last 7 years or 8 years, those have coincided with the 3 most important lows in precious metals. You can see I have gold and GDX there in the middle of the chart. So, those big moves, they occurred around a significant correction in the stock market. So, I've said for months, the catalyst for the next move, you either have a stock market correction, and I think there's a risk of that happening in the next 3, 4, 5, 6 months, that we could see a 15 or 20% decline. It might not be imminent. I think, after maybe we get into the new year, and this could coincide with that. You see the Fed starting to hike rates. And as I said on the last video I did on this channel, the Fed starting to hike rates tends to mark important lows, and that tends to be a start of a really good rally in precious metals. And so I'm going to get into that in the last slide here. And this is rate hike data from the last 4 cycles. There's, I think, 8 since 1960, but I also included 1976. And what we see here is that when gold declines leading into the rate hike, it leads to a big rebound. Now, the 93 to 94, that data, that actually, the rally started several months before the rate hike. So the same thing happened, but it was actually 6, 7, 8 months before the hike itself. But so nevertheless, I mean, if you want to focus on the last 3, what you see is that for several months, gold declines. Then when the Fed hikes, gold begins a rebound that lasts 3, 4, 5. It's a really good rebound. And if we look at the last 4, after the rebound, gold hit a 2 or a 2.5 year high minimum. And so the recent peak to measure from would be 1880. I mean, it was 1879.5, but let's round it up to 1880. It happened 3 weeks ago or whenever. A 13% decline from that would take it down to 1635. And if you take a 23%, the minimum there, you take a 23% rebound, that gets it back up to $2,000. So that's my, looking at this data, I'm also following. I mean, right now we have, it's a moving target, but the market is basically pricing in a hike in May. So I think depending on what happens in the next couple months, It's a moving target. So if the stock market stays around these highs and doesn't correct, you're probably going to see a hike in May, maybe even March. March is up to a 39% chance right now. However, if we get a significant correction in the stock market, that would push those expectations back. And, if that happens, precious metals would have a decent rally before the rate hike in that scenario. But, I'm more focused on this and this data. And, the last thing I'll note, I looked at the last 4 cycles. Silver has an average rebound of 42%. So it's clear where we are right now. We're in a correction. We're in a downtrend in precious metals. So you have to be careful. But we are setting up for some very bullish catalysts next year. And that's my viewpoint. If the Fed hikes rates in, around May or earlier or in June, that's going to set up a rally to at least, I think, 2,000 by the end of next year. So that's what we're looking at. That's what we're working with. And that's the analysis for this video. Hope you enjoyed it. Let me know what you think. Leave a comment and click the link in the description to get that free report. Don't miss it. Thank you very much.